Good morning, it's Harvey Jackson. Just going to go through some news items. The main one, China purchasing wheat for the first time, and some actually confirmation of some vessels there. China begins limited purchases of wheat, farm goods from the Trump Xi meat. I think there's two cargoes of meat or wheat. One was soft white and the other one was spring wheat. Now, Chicago actually took off and traded decently, but the spring wheat is yet to actually move at all. And U.S. sorghum shipments are starting to take off there as well. They were actually no shipments as well, just alongside the soybeans there. So COFCO held soybeans procurement signing ceremony until earlier today, which is the Thursday ceremony, and it's just confirms that there's still going to be a 13% tariff on. You can see the 13% there, and that's on soybeans, but not on the wheat. So we'll see if that sticks and whether there's going to be that purchases that actually match what the U.S. White House has said for purchases, because that's yet to even get close to happening. Because there's basically only this month and next month to get to your 12 million metric tons, but there's some caveats in there that actually suggest that if it's not the right price, they're not going to buy, and they've already bought substantial amounts of Brazilian wheat or soybeans, and you can see here just how the basis has dropped in Brazil on the soybeans as well. So oil pressured by signs of weaker demand after U.S. crude build. So the latest EIA report revealed that the U.S. crude stockpiles rose by 5.2 million barrels last week against expectations of a 100,000 barrel decline, raising fears over excess supply and adding further pressure to prices. Saudi Arabia significantly reduced the price of its crude oil for Asian buyers in December as OPEC Plus continues to ramp up production, fueling concerns that demand growth in the region may be softening. I've said this all along. As long as OPEC is pushing the narrative to keep this close to a $60 barrel or 65 on the Brent, so this is the West Texas, but this and the Brent, close to 65. That is going to discourage the use and the profitability of using renewable fuels. Bar chart cattle reserves limit losses on Wednesday. So the live cattle futures are down 7.25 limit, and the feeder cattle 9.25. So that's the limit, and then it's expanded limits when it opened up at 8:30. I do not expect to expand the limits much more than this. We did have limits getting hit. I think it was only 2 weeks ago, and it did trade lower the next day, but it didn't use the expanded limit at all. Just the Bank of Canada says Canada's economy will crawl with this new budget. While the PM brags about unimaginable growth, so there's your clown show Carney, thinking that there's going to be growth when you have record debt in his budget. Debt, regardless whether it's a generational, it's a generational debt, but they're saying generational investments. It's like doubling any farm. That would be a generational investment, but not in this environment. It's pretty tough to do. A Trump Supreme Court tariff defeat would add trade uncertainty, and that is certain, especially as he has the Supreme Court lined with his party bias, and yet there's still a lot of questions, and I think quickly they're going to probably find another way to keep these tariffs on, and that's what Trump's team is looking for, other ways to keep that on, but it still would create lots of uncertainty. You can see that there's a little bit of active weather in the east and the west, and what I'm showing here is just how it's going to be cooling down, warming up, and then actually it looks like it's going to get extreme cold in 10 to 15 days. So just a quick look at the canola. It's at 640 trading futures right now in January, and the rapeseed is down $4, trading at $4.75. Soybean oil is above the 50-cent mark again, and your West Texas trading right at $60 as I took the screenshot. Soybeans trading at 10.43, up one and a half pennies. Spring wheat is just down a penny, and your red winter and your Chicago wheat were down 8.5 to 9 cents. Corn was down 2.5 cents, and the Canadian dollar is just trading just slightly green as we spoke. You can see that this consolidation going sideways here, still in a little bit of an uptrend, but still needs to beat that number before we can actually say that we're in an uptrend. Actually, the other area would be right there, the 200-day and the 100-day moving average. It's got to get above that, and it's not at this point. And yet, when you look at the NOV November of 26, I still think this is a relative good place to get some more sales made. Just because we're not that far away from the December 4th date where we're going to have a little bit more numbers, and it is talked that next Friday we're going to have it might not be next Friday, November 14th. The government numbers are going to put out a stocks report for the world to see the ag stock numbers. Rapeseed in Europe it's trading down, so you got a little bit of a pullback here, back into and below the 200-day moving average. Right now, the rapeseed is trading $133 higher than Canadian canola in price in Canadian dollars. Soybean oil still chopping sideways, but still following this downward trend here at this moment. The 200-day moving average is still a number that it seems to be holding on to. Looks like a possible start of a little bit of a pendant here. Now, that doesn't mean that it's going up more. It could actually mean that it's coming back down the flagpole distance here. It's either or in that formation. Soybean for November of 26 is trading at 11.09 at the moment. I still like the idea of getting a percentage of your sales for next year just on futures only. I think Cargill's the only one that's allowing that to happen. Of course, there's a cost to do it. So just a quick look at the Canadian dollar here as well, right at a sell target, and if it breaks through there, there's a good chance that we're going to retest this 69 area that we got to there. There might be some other levels, but 70 cents, and then 69 for sure after that. The U.S. dollar got to the $100 index, and if it continues to go through there, we can see some levels into the 107s and 103 or higher. NASDAQ, it just keeps on creeping. Like this is the top 100 companies in the U.S. and they keep filtering it that way, so that's why this just keeps going up. Wheat, spring wheat is just it's a nothing burger and still doesn't want to breach that downward trend line, and basically trading sideways into a wedge here right now. The Kansas wheat broke above it, but still off on the day. Still looking for it to approach that 200-day moving average for it to change trend. Chicago wheat is a lot closer to it and looks like it tried to breach the downward trend line and see if it can actually get above that 200-day moving average as well. That would be a first sign of some sort of life in this market for sure. And your European Matif wheat, the French wheat, is trying to get above a downward trend line and approach its 100-day moving average there as well. Corn futures chopping sideways with this resistance of the downward trend and the 200-day moving average. Just a quick look at the meats. This is where you have your limit down at 7.25 for your live cattle, and your feeder cattle down your 9.25 as well. We had these limit losses previously and just didn't materialize with the expanded limits, even though the expanded limits will be trading at on the open of the market here. And hogs, just to mention, it looks like it's starting to consolidate a little bit here as well. And that's all I have for you today.